I don't post these YouTube videos and share my thoughts on social media because I want to be some sort of, wow, he's a trader influencer. He's such a good trader. Whoa, have you seen? I don't care about any of that. I do not care about how anyone thinks of me, whether it's positive or negative. Okay? What my main concern is I know for a fact that if I have information and knowledge that can help people make a few extra dollars, I know what a few extra dollars can do for someone's self-esteem. I know what it can do for someone, for their self-worth, and how much they love themselves and how happy they are and how much it can help people's families. Okay? I'm sharing this knowledge as a way to communicate with other people that I don't communicate with on a daily basis. Okay? So I have friends and family, whatever. So I can speak to them in person and on the phone. I can share ideas with them, whatever, right? But the main thing with this whole social media thing that I'm doing is this is just my way of communicating with everyone else that I can't physically speak to every day. Okay, so literally what I'm sharing is the exact same thing that I share with everyone that I know in person. And this is no joke because I don't like I'm just going to start the video. All right. I literally just do this to help people. And I don't share videos for the sake of sharing them. I share them knowing that they're actually high quality information that can really help change people's lives, as corny as that may sound. Okay. So yeah, without further ado, let's go ahead and start the video. But of course, if you do enjoy my content, go ahead and subscribe to the channel. Yeah. So let's start it. So here is the SPY. Right? A few days ago on July 19th, we saw that it was extremely oversold on the MACD. Okay? We saw that it was extremely oversold on the MACD. I gave a few levels of support, whatever, right? And then we ended up crossing above multiple layers of resistance, crossed above 429, crossed back above this trend line that, signaled this huge upward movement. Because back like a few weeks ago when we did cross above here, for the 3 closes, right? That signaled the huge pop-up, and we also monitored that as well. Okay, so now yesterday we crossed above that level, and today we crossed back above and closed above the March 2020 bottom COVID-19 level. Okay, and that is a very good sign. The fact that we closed above this level. All right, so now tomorrow, the level that needs to hold for this, uptrend, for this level to remain intact is 434.30 is essentially the level that needs to hold as support. And if we can hold that level as support right here, right, we can go all the way higher and make new all-time highs very, very easily, because you can see that the MACD is still extremely oversold on the SPY, right? And when we are that oversold on the SPY, that is a very good signal that we can potentially continue on higher. So now say, for example, we go back here and we look, we're extremely oversold. You see the blue line is very much lower than the yellow line. And we know that in the past, when that does happen, there is a very good chance that we can bounce from that level, especially if we find support. Okay, so this is a very good opportunity to go long. And that's exactly what we did. And another thing to look at is the MACD barely moved, yet the SPY moved in a very, very strong way. So if you guys watch my YouTube videos, you understand that when the MACD does barely move up to the upside, but the price movement is very, very dramatic, that is a very, very bullish signal, okay? Because you know that in the opposite is when, say, for example, the MACD moved very, very sharply to the upside, but imagine the SPY only went over here, okay? And it didn't even cross above 426. So now the fact that the MACD moved sharply, but the price of the SPY couldn't break above resistance, that would be a very bearish sign, right? So I hope you guys understand the difference. Go ahead and rewatch that past minute and a half or whatever to understand the MACD, the importance of the MACD, right? And right now the SPY's MACD is ridiculously bullish. So once again, yeah, if we hold that level, we can go ahead and make new all-time highs. Now let's go ahead and check the IWM that we called out perfectly. So we saw that the we saw that the IWM was trading and it opened below the lower level of the Bollinger Band. So please pay very close attention to what I'm about to say. On the IWM, on the SPY, and on the QQQ, okay? On the three main indices, when we are in an overall very, very bullish market, when the stock market is at new all-time highs, when we're doing very, very great in the overall stock market, regardless of the economy. I'm not saying the economy has to be doing good. If the stock market is doing phenomenal, okay? When those three indices fall to the lower end of the Bollinger Band, mathematically, algorithms buy the crap out of it. Because mathematically, these algorithms are written to buy when a stock is very, very overextended to the downside. So what the Bollinger Band does is it basically takes mathematically the standard deviation to the upside and the standard deviation to the downside from this 20 exponential moving average. Okay, so mathematically, literally, the Bollinger Band is just one standard deviation away. So when we saw that the IWM was trading and it opened outside of the lower standard deviation, that was a very, very good buy opportunity signal. Understanding that hedge funds and banks are going to buy the crap out of that and bring the market back up. Okay, because that is a very, very good buy opportunity. When we are very overextended to the downside, but the stock market in general is amazing, that's exactly what happens. So every single time that's happened, back here, so many other times, okay? Those have been amazing buy opportunities. We saw that we fell to support back here. We were outside of the lower level of the standard deviation in a very, very bullish environment, and we reversed very, very aggressively, okay? Same thing on July 8th. We stopped at support at 218. We've been monitoring this level as well. We bounced very, very aggressively. And the same thing this week. We overextended even further. And the furthest it's been, actually, in these past few months to the downside, that was the perfect opportunity to buy. When everyone is extremely fearful, like here, when we opened up lower, that is the best opportunity to buy. Okay? And that's exactly what we did. We ended up making a lot of money. And yeah, I hope I helped you guys understand what's going on essentially in the market. The IWM broke above 221, 220.88, which was, you know, the level that we've been watching, closed above that level. So now the IWM's next level of resistance is going to be approximately 224, which is the 38.2% fib level. And the IWM doing well obviously means that the US 10-year yield is also doing well. Okay, so the US 10-year yield, we can also see that it was trading outside of the lower level of the B band. And of course, you know, if the US 10-year yield is doing well, and if the dollar is doing well, then the IWM is doing well. And that is exactly what we saw here. Okay, and yeah, that's really it for the IWM. Now we can go ahead and take a look at the NASDAQ. So as you can see, 3 days ago on Sunday, I posted NASDAQ support. You can see that this little arrow that right here, one second, let me zoom in. Look at this. This little arrow right here. You see this? This is the level of support that we've been watching, okay? And I drew an arrow that we were going to fall to that level. At this point, we were still short. I was short over the weekend, and I knew that 354 was going to be a very, very important level on the NASDAQ, and we would bounce off of it. I made this a thumbnail, and then I said the NASDAQ needs support. I drew the freaking the candle two directions again, just to, you know, incite people's curiosity, and we held the support. In the video, I said, look, I think that the market is going to bounce. That's why we went long, blah, blah, blah. I said that we were bullish here because we held that level of support. That's exactly what happened. All right. This is no joke. So as you can see, we held the 23.6% fib level. Yo, this is not This is, look, I went short as soon as we closed below this trend line. We've been monitoring this trend line for 2 months, okay? The first day that we closed below the trend line, super bearish. That is so bearish. And usually the safest way to aim to the downside after a very, very bearish breakdown is the 23.6% fib level, okay? And that's where I closed out my shorts and I alerted everyone to go long on the IWM specifically because the IWM fell the heaviest. So when an indice falls dramatically to the downside, their reversal to the upside is that much more dramatic. That's why I alerted the IWM, okay? So now, as you can see, the NASDAQ held 354 like a champ, okay? We did dip below on Monday, that's fine. But then Tuesday, you know, the holiday, we went to a low of 353.80, which is 8 cents away from this 23.6% fib level, all right? And we held that perfectly, and we continued moving on higher. So you can see here on the NASDAQ, obviously it's not as oversold on the RSI, but the NASDAQ is very oversold on the MACD. And we held that level of support. We bounced off, and we still have not yet crossed over on the NASDAQ. So when we do cross over, that is also another bullish opportunity. Okay, so the way that the trajectory of the overall market is going, we need to see how the NASDAQ responds at these levels. We need to see how the NASDAQ responds at around 362 and 363, because there is going to be a lot of resistance. So it closed on its highs today, which is a very good opportunity. Sorry, it's a very good sign, but we need to see how it responds at these different levels of resistance, okay? And the one thing that we can also look at in conjunction to the NASDAQ is the 30-year yield. So the 30-year yield looks very, very bearish. But the NASDAQ, obviously, you know, it was bouncing. So currently, the correlation is not as strong. But so the 30-year yield can actually continue falling back down to this trend line here at around 161. So we just have to continue monitoring that. Back to the NASDAQ, you can see that the MACD is very, very oversold, right? So that is a very bullish sign. But then on the 30-year yield, the MACD is very, very overbought. It sharply moved to the downside while the MACD barely moved. So that is a very bearish signal. But it doesn't necessarily need to, like, you don't need to get warned, you know, alarmed, like too heavily, because the NASDAQ is still doing well. And the level of support is still all the way down here, and that can potentially hold. So we just need to see how the 30-year yield responds to this MACD condition. And this is very important to understand as well, because, you know, you can see this exact MACD pattern on different indices and different stocks as well. So understanding that, oh my God, this looks very, very bearish, you can apply this same thing to other stocks and crypto as well. All right. But yeah, for now, the 30-year yield doesn't seem to have much of a correlation to the NASDAQ. The NASDAQ bounced extremely heavily. It needs to cross above 362, 363. And aside from that, now I guess we can talk about the dollar. All right. So the dollar fell a bit as well. It failed at this level of resistance at around 93. So it couldn't cross above 93. We can see that it had a huge rally for a few days. And we could not break above this level of resistance, even though the dollar crossed above on the MACD, which is supposed to be a very, very bullish signal. Obviously, it was bullish. We did move on higher, but today we, you know, could not cross above. So we just have to continue monitoring that. But overall, the dollar still looks very, very bullish. The 30-year yield, it's been, you know, sharply moving up to the upside, so a bit of a sell-off is normal. And same thing for the NASDAQ. We've been skyrocketing, okay? And we shorted it. We dropped back down to the 23.6% fib level, and we found support, and we're now bouncing back off. The 10-year yield sharply moved to the downside and is now bouncing, okay? So, yeah, there's my analysis for the overall stock market. And one more thing we could look at. Yeah, look at this. A crude oil. Crude oil bounced perfectly off of the 786% fib level. And I said that if this doesn't hold, then we can easily go back to 6150. But 6486 held as support. And you can look at this. You can also see that we fell extremely outside of the lower level of the B band, which was a huge opportunity to buy. And that's exactly what happened. All right. It's a good sign that we closed above the 50% fib level at 69.27. Now we need to see whether or not we can cross back above the 38.2% fib level at 71.09. All right, so there's my analysis on the stock market. Now we can take a look at the crypto market. Bitcoin. So we did cross below 30,000 yesterday, and that was a huge warning signal. But we bounced off of 29,296. We crossed back above 30,000. We saw that we were very, very overextended to the downside as well on Bitcoin. We were outside of the lower level of the B band, which was another potential buy opportunity. We can see that the MACD was oversold, which was another bullish signal. And we did reclaim 30,000 as support, which was a good sign and gave an opportunity to go long and make a lot of money to the upside. But the level of resistance was literally the 20 EMA. The 20 exponential moving average that I was talking about earlier in the video acted as resistance because algorithms were buying because we were very overextended to the downside. Because we were one standard deviation away to the downside in a bull market, this was a very good opportunity to buy. Okay? And the 20 exponential moving average acted as resistance because they were keying off the fact that 30,000 held, and they were keying off the fact that we were very overextended to the downside outside of the Bollinger Band. All right, so that's what they were looking at, and this acted exactly as resistance. So, yeah, it doesn't get any cleaner than that. Now we need to see if Bitcoin back to 31,500 level, if it can remain above 31,500. And that's about it. We can see that the RSI is oversold. It still needs to cross back above, but this is a bullish signal. We still really need to reclaim 33,000, this blue trend line here. And now we can go ahead and look at Ethereum. So Ethereum, if Bitcoin acts like this, then that is not going to be very good. Yeah, because Ethereum, it crossed back above on the MACD, yet it failed to really cross above 2150, and it really failed at the 20 exponential moving average as well. Okay, we can see that the RSI moved sharply upward. The price of the stock barely moved. The MACD crossed upward, but the price of the stock barely moved. So I mean, that's not the best sign. Okay, and it correlates potentially to Bitcoin as well. So we need to see if Bitcoin responds in the same way. If it crosses up on the MACD but fails at resistance, that is going to be a warning sign and a potential short opportunity. Okay. So yeah, overall, that's the entire crypto market. There's my analysis for the day. I posted my plays on Twitter. Obviously, if you watched this video towards the end, I'm sure you're already following it. I posted multiple plays and they worked out amazingly. All right. So without further ado, I hope you guys had an amazing day, and I'll see you guys tomorrow.